What's going on, guys? D Anthony here. I want to give you guys a little bit of a trade recap, kind of show you a trade that I just got out of here on NVIDIA. So what I did is I took some calls. They were $195 strikes. My expiration was this Friday, so I was playing weekly expirations. I took 10 contracts just to kind of give you a perspective of, how many contracts that I took. I'm going to dive into the reason why I took this trade, what exactly I was looking at. So before we get into that, I'm going to show you a couple of things on my chart as far as some supply and demand zones. So maybe if you guys want to try to use the way that I trade in your, trading style and journey, or add it to your setups, feel free. So what we're looking at here, the green line up top, 201.66 is the day's highs. I made it green, so I just color coordinate things so I kind of personally know exactly, what's going on. This first white line here is going to be the pre-market highs, 197.62. This bottom white line is going to be the pre-market lows at 194.87. Okay, so normally what I do is I will put this red line down here after the first 30 minutes of the market. I will put it underneath the first hour lows. So this was higher, and now I've readjusted it because as soon as price action does take out those first hour lows, that potentially is a short scalp position. Now you could have taken that for let's see exactly what the price was here. If you would have entered into that short play underneath the first hour's lows, that price was 194, and we only dropped down to 192.76, so about $1.25 worth of room. Now, depending on what type of trader you are and how much size you took, you either made money or you got trapped and got stopped out. So for me, example, I always look to take $1. Anything over $1, I start scaling off my size. So, as soon as we start running into 80 cents, 90 cents, I'm looking to sell down my lot size of 10 contracts. Now, for someone who takes maybe 1-2 contracts, maybe you're only up $30, $40. So you kind of hold, hoping for a bigger move, and then it reverses. So you're going to have to exit that trade as soon as we get back up over that 20 period moving average. So either maybe you scratch off on that trade, or you take a very, very small loss. You just kind of move along. Those are just two ways to kind of play it. Different account sizes is going to determine your emotions when you're actually in these trades. But the trade that I took was right here in this area. So I took the 195 calls, which is right at the money, right? So if we kind of look at when we reclaimed this 20 SMA here at 8:50 a.m. Pacific Standard Time, the reason why I had some confidence going into this is because after we sold off here, we kind of made that bottom below the pre-market lows, and we kind of stopped here at 192.76. So I adjusted my demand zone down here. If we are to lose this area, I will take a short position below 192.76. Once I seen us start to stabilize and make our way back up, and we closed back over this 20 period moving average, the next thing that I wanted to see us do was get back into the pre-market lows channel. Okay, so as soon as we got back into this pre-market lows channel, and we kind of confirmed this is exactly where I got in at around 9:05. We kind of made in a little high here at 196.25, came back down, chopped around sideways, and I sold on this, massive green candle here. As soon as we took out this consolidation, we started making our run up. I started to scale out of that position, and then finally got all the way out. I didn't catch it all the way at the top here, but I got out, about a good 65-70% up on this candle. That was enough for me. I knew that we were going to come into some more supply zones just because of the pre-market high at 197.62, so I wasn't expecting more. Now there might be another potential long trade here if we get over 197.62. Wait for it to close over, either pull back or consolidate, and then confirm the highs, and then you would be looking at a price target potential of 201.69. Now, if we do come back down and we re-lose this 20 SMA and re-lose this pre-market lows, you might have a short opportunity back down from 194.87 back down to the day's low of 192.76. So that's exactly how you can play it. So I just wanted to give you guys a little rundown on my thought process and what I'm exactly looking at and how I'm taking these trades and what I'm actually waiting for. Because a lot of times it's not just about putting on trade after trade after trade after trade. Yeah, you can do that, but you're going to start to take too many trades, and you're going to start to chop yourself up if you're trying to go long every green candle and short every red candle, so forth and so forth. So just kind of allow the setups to come to you. and kind of see, right? So like if you guys are a member of my Discord community, you know that I also have a little scalping strategy here. We just call them 20 plays. So, you know, we had a 20 play short on Nvidia, you know, cut fairly quick off the bell here, 6:45 a.m. So just about 15 minutes after the market opened, we had this massive spike, and then we lost the 20 period moving average, and then we confirmed that price of 196.48, and then from 196.48, let's call it 196.50, all the way down to a price of 192.76 is a hell of a trade, right? So if you are in the Discord and you are looking for this particular setup, you would have made a nice little clip on that. And here was your second trade here. So essentially, if you were just following the 20 plays, you would have taken 2 trades today, both of them profitable. You'd be closing down your computer screen right now, heading onto the beach, or going to grab some lunch, or, you know, taking a walk, taking a nap, doing whatever you guys got to do. But just to kind of give you guys a little bit of you know, clarity as to what I'm exactly looking for. If you like this type of video, make sure to like, comment, and subscribe, and I will see you guys all on the next video.